Welcome to the India Fintech Diaries, the only podcast focused exclusively on the Indian fintech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's fintech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of fintech in India.
Welcome back to India Fintech Diaries. I'm your co-host Hemant, and I'm joined today by my excellent co-host Elroy. How are you doing today, Elroy?
I'm great, Hemant. Today is the second episode on the crypto theme, and we talk about all things DeFi in today's episode. Today, we'll try and cover what it is, how does it work, why it matters, should banks be afraid of DeFi, how does this change things for fintech in India? I'm hoping that we'll answer this and a lot more today.
Excellent, Elroy. This has been an episode and a recording that I've been waiting for a long time. So it should be a really great experience for me as well. But let's start something with the basics, even for me, right? So what is decentralized finance or DeFi?
That's a very good question, Hemant, and we actually asked a few of our listeners this very same question. So let's listen to what they had to say.
DeFi or decentralized finance for me is what the term says. It's decentralized. There is no central entity. Unlike in traditional finance where you have a centralized system where you have the credit scoring system, you have the central bank, and you have various participants in the equation. A decentralized finance for me begins with a blockchain or a cryptocurrency based mechanism where people are free to use their cryptocurrency or any other alternative assets to lend, borrow, finance, make returns, make gains on top of this. That's what I think DeFi stands for.
DeFi or decentralized finance will change the way we do financial transactions because it does not require the involvement of intermediary institutions like banks or brokers. DeFi allows us to interact peer-to-peer, so transactions can be done in a faster and cheaper way. You may hear a lot about blockchain, and is it the technology that makes DeFi possible?
So DeFi, frankly, I don't know much about it, but what a little I know is that it's I think decentralized finance, a technology built on blockchain. So basically decentralized applications. A lot of people are saying that it's going to be the future of finance. Built using smart contracts and whatnot. So I think the intent is to give more flexibility to users, be it for payments or transactions or whatever. I don't know if I'm right or wrong.
Those were some very interesting definitions from some of our listeners. But that discussion actually got me thinking. So, what exactly is DeFi?
So, the way I explain DeFi to folks is that DeFi, first of all, stands for Decentralized Financial Services. And the idea is relatively simple, which is that you should be able to use and write applications that handle your money or your financial assets in an automated manner in cooperation with others.
That was Paul Brody. Paul is the principal and global blockchain lead at Ernst & Young. Paul drives EVA initiatives and investments in blockchain technology across consulting, audit, and tax business lines. Over the last year or so, I've come to appreciate his fresh thinking about blockchain, crypto, and DeFi. Here's how Paul defined DeFi. A very warm welcome to this DeFi special episode, Paul. We're very grateful that you could make it. For the sake of our audiences, Paul, could you quickly give an introduction of yourself?
Sure thing. Thanks for having me. So I'm Paul Brody. I'm the global blockchain leader at EY. And I have been at EY for about 6 years now, leading our blockchain business, building out all of our functionality and technology, not just the consulting side, but also what we're doing in assurance, tax, and technology and engineering, which is really exciting. And I actually came to EY from IBM when I got really, really excited about blockchain technology and wanted to be focused on it and got the opportunity to do that at EY.
Paul, Eva has also been involved in some pretty interesting projects as far as blockchain as well as DeFi is concerned. Could you quickly maybe elaborate on some of those?
Yeah, happy to. So, we've spent a lot of time over the last 5 or 6 years with a particular mission, which is to
Right.
make the world safe for large enterprises, whether they're in financial services or industrial companies, to use the public blockchain ecosystems. And so for us, that's meant a couple of big things. Number one, really focusing on audit and assurance, being able to tell CFOs of corporations, hey, this is legal, this is safe, this is reliable.
Right.
Yes, we know bad things happen in the world of blockchain, but you don't have to be a party to that. You can use this technology. So that's been a big priority for us. And then we've also made a lot of investment around engineering the technology for enterprises to use. And one of the ones that we're very proud of, for example, is the work that we've done with Microsoft to move all the Xbox video game contracts onto an Ethereum blockchain so that they can handle very complex contractual agreements and do so literally in 99% less time than they previously took to do the same work.
That's pretty interesting, Paul. I'll quickly jump through what we are to discuss today, which is DeFi. And it's a quite a complicated topic. So I just wanted to maybe quickly get your take on what your definition of DeFi would be, were you to explain it to someone who didn't understand the world of crypto.
So the way I explain DeFi to folks is that DeFi, first of all, stands for Decentralized Financial Services. And the idea is relatively simple, which is that you should be able to use and write applications that handle your money or your financial assets
Right.
in an automated manner in
Right.
cooperation with others. So today, almost everything we do in the world of financial services depends on centralized authorities and requires your sort of manual direction at each step. And the idea behind DeFi is twofold. Number one, you can interact in an automatic way with other parties. And number two, that you can get things done in an automated way without any central authority controlling the ecosystem. So I can take an asset that was, say, issued by one provider
Right.
and plug it into a service from another. So I could take, say, a US dollar coin and I could give it to a deposit contract that pays me interest. And neither party needs my permission to do this. And that's a big part of what's the decentralization part, is the fact that no one party controls the ecosystem.
Next, we spoke with Rohas Nagpal. Rohas is currently the chief blockchain architect at Wrapped Asset Project and has been associated with the India Crypto since 2015. He has helped co-found BankChain, a community of 37 banks for exploring, building, and implementing blockchain solutions in India, and is the author of the Future Money Playbook. Let's listen to what Rohas had to say about DeFi.
Before we understand DeFi or decentralized finance, I think it's better to first define centralized finance. So, when we look at the world of finance today, everything is centralized to either the government or certain regulated entities. So, whether we talk about banks, stock exchanges, or commodity exchanges, because the world of finance is centralized around them, that's the conventional world of centralized finance. Now, if you replace these entities with blockchains, whose nodes are run by an unidentified number of people around the world, we call that decentralized finance. So that would probably be one of the simplest ways of defining the term.
Finally, we spoke with Moresh Kokane. Moresh is based out of Melbourne, Australia, and is currently the technical architect of the OpenDAO DeFi project. He's been working in the crypto space since 2017. We thought we'd also get a practitioner's view on what DeFi is.
DeFi, I mean, it stands as the acronym for decentralized finance. As you probably are already aware of, all finance and all transactions as of now are based upon a centralized party. Okay, I mean, when two people transact, if they have any dispute, then they will typically rely on a centralized third party, such as the government
Right.
or some sort of a centralized authority, which will then adjudicate between any conflict. What DeFi does is it is essentially the same premise behind blockchain and Bitcoin, etc. You don't need a centralized third party to adjudicate. You rely on the smart contracts, which are self-executing and immutable, which means there is basically no possibility for a conflict to arise because the rules are predefined and people just transact based upon the rules. DeFi is really an application of the blockchain technology, and it focuses purely on value transfer. And by value, it means financial value. And there are a lot of applications which have been built in this ecosystem, which are beginning to form the Lego blocks of what can and is already turning into a very cohesive and advanced ecosystem of finance. It includes lending markets, exchanges, derivatives, and various permutations and combinations of all these. And that's basically DeFi. It's really eliminating the middleman. I won't say eliminating the middleman, eliminating the centralized authority and allowing people to transact between each other directly. That's basically DeFi.
Okay, time for a little bit of background. While DeFi is in the limelight now, it actually started way back in 2017 with MakerDAO. MakerDAO introduced a new token called DAI, which was pegged to the US dollar to an automated system of smart contracts. DAI introduced the concept of over collateralized loans, which is basically depositing a collateral of greater value in the smart contract and the DAI emitted by the smart contract. DAI let investors get exposed to lower risk by holding DAI than the more volatile base token of Ether. When we began building the outline of this episode, I wasn't certain how big or popular DeFi had gotten since then. Even as late as May of this year, it seemed to be fairly niche with just about $10 billion of Ether locked up in DeFi smart contracts. But what really got my attention was just that in the last 3 months, that value tripled to over $30 billion. Today, the overall value of crypto locked in DeFi across various tokens is close to over $100 billion, with over 122 different services providing solutions for exchanges, lending, and payments. DeFi seems to be exploding, and as we delve deeper and deeper into the space, we kept encountering the same questions. What exactly are the building blocks of DeFi? How does it work? Well, if you had to just break this down a little bit further, right, what would be the broad level building blocks of this DeFi ecosystem?
So the big building blocks, the way you can think about the building blocks of the DeFi ecosystem, and that's a great way of asking the question, is think about it as I have stuff, I have assets, right? And
Right?
then I have services that can be performed against those assets. So if you think about the traditional financial system, I can have an asset like a dollar or a rupee or a pound. And a service that could be performed against that asset, for example, is I could put it up as collateral and borrow against it, or I could make a deposit and earn interest. So you have assets and you have services. And the world of DeFi, what DeFi does is it allows you to build these individually componentized assets and services. So lots of people offer not just dollar, euro, and other currency assets, but ultimately what we want to see are inventory as an asset, real estate as an asset, uh, purchase orders or receivables as assets, and the ability to automatically borrow against them, sell them, purchase them,
Right?
transact them throughout the ecosystem. And that's what I think is going to be really exciting is this kind of fully public, open financial ecosystem that's as programmable as the internet.
What are some of the use cases you think, Paul, will be very relevant as far as DeFi is concerned?
So over on the enterprise side, I think the big use case is going to be driven by the desire of customers to automate their financial transactions with business partners. So if you want to get paid, say in less than 30 days or 60
Right?
days for a sale that you completed, you'll be able to just plug that receivable into a blockchain ecosystem and say, pay me now. Right. So I think enterprises will be able to use this to manage their working capital in a really easy and kind of seamless manner. Over on the consumer side, I think it does kind of two or three things. Number one, the DeFi ecosystem will open up lots of services, and you'll be able to pick which lending service or which interest payment service or which asset service you want to buy from, right? Or
Right.
park your money in. You will help people put their assets to work.
Almost like an app store for finance.
Exactly. And it will create this whole new class of assets, right? Where, there's all these companies that exist in the decentralized financial services ecosystem that you'll be able to invest in as well. So I think some set of options there will emerge. So new asset types, new asset classes, lots of new services, The other thing it will do, and I think this one may have a very far-reaching impact, is it's going to significantly reduce the costs that people face for transactional activities. Right, they're already relatively low on the consumer side, but they're quite high on the enterprise side. And I think we're about to see a revolution in terms of what it costs not to do a small, simple thing like a payment, because payments are easy and cheap. Right?
Right.
People keep talking about payments as if we have some revolution coming there. I don't think so. I think payments are actually quite inexpensive. Where I think the revolution is coming is in much more complex services like trade finance, asset finance, receivables factoring. These are areas where you want to link business logic, assets, and payments together. And that's what's difficult for the system as it exists today.
After getting a better sense of what DeFi is and what its building blocks are, the next thing we try to understand is how DeFi actually works in the real world. We caught up with Moresh to understand how OpenDAO is trying to use DeFi to power the next generation of stablecoins. Here's what he had to say about some of the use cases that are being powered by OpenDAO.
Moresh, you have also been working at OpenDAO to build a whole set of DeFi tools, if I could say. So I'd like you to quickly maybe break down what you're doing at OpenDAO and also tell us of a little bit about the real world applications of DeFi.
So OpenDAO is really a evolution of my previous work. I started off by running what it was an real estate equity crowdfunding platform in Australia, and that went quite well for a few years. And then the objective was always to raise as much money as fast as possible. I mean, that's really what finance is about: connecting money on one side to people who need that money.
Right.
The objective was always to reach as many people as fast as possible so that the cost of capital would be lower and the speed of capital formation would be faster. Essentially, we decided to reach out to more of an audience, and that was where we started tokenizing our securities for various projects which we were raising money for. And that was the STO platform, which was called Concrete, and we ran that for a few years. And then we started progressively becoming more and more on chain. In the last 2 years or so, decentralized finance has really exploded in volume. It has gone from sub $1 billion to almost 65-70 billion dollars, and it keeps on growing at an exponential rate. So there is a lot of money which is sitting out there, and we are trying to marry it with real world applications. So as of now, most decentralized finance is really purely on chain. What that it means is the assets are basically on chain, digital native assets, and it does not really percolate into the external world as much.
Right.
What we are really trying to do is we are trying to build bridges whereby the on-chain liquidity can be married to off-chain use cases. For example, like, is it developing a real estate project, or is it about trade financing, invoice financing, secured unsecured lending, etc. So what we are trying to do is we are trying to figure out how we can build the bridge between this on-chain liquidity to off-chain. Because if we can do that, then we can connect abundant capital where it is actually needed, which is what finance basically is: trying to connect capital from where it is to where it can be most productively utilized.
And if you were to look at what are the top use cases that you're seeing today on OpenDAO, what would those be?
So I will say long term, okay, because right now we are purely an on-chain project, and we are trying to build our own liquidity
Right.
and transaction volume, etc., before we jump off chain, because that needs to be achieved before that. I am originally from the real estate development space because I did real estate equity crowdfunding. So yes, that is going to be one of them. However, there are two more applications which I see significant use cases for, and they are trade financing, invoice financing, receivable financing, etc. And the second one is unsecured lending in particular. I mentioned those two because they are a very good fit from a technology as well as compliance perspective. There are specific reasons for that, but those two applications are really good fit for connecting real world assets to DeFi.
This discussion on use cases got me thinking. If DeFi became more widespread in use, would this mean an end to traditional banks? What are the threats that decentralized finance poses to the current incumbent centralized finance entities of banks? Well, I spoke with Paul to gain more insight into this. Listen in. What do you think might be some of the things that banks or centralized finance should be worried about as far as DeFi is concerned? How do you think the whole CeFi versus DeFi battle would play out in your opinion?
So there's a funny saying, and I've never been able to figure out where it originates, but they say the organizations that oppose each other come to
Right?
resemble each other. And so what I believe we're going to see over the next few years is a kind of big battle between centralized financial services, more traditional financial services, and decentralized services. And at the end of this battle, they're going to look remarkably similar. And
Okay.
each side has got some big advantages. So over on the DeFi side, the thing that the DeFi companies are able to do, they were able to build very sophisticated services incredibly quickly, right? And they're
Okay.
able to run them with extremely low overhead because, if I am going to offer you, say, a deposit contract or a collateralized lending application, I can do that with just a little piece of code. I don't need to take all the deposits. I don't need to build a banking system. I don't need to do a lot of stuff. So you can build things really, really fast. But your sophistication in terms of what you can build is
Right?
somewhat limited, and your competition has got some big advantages. The big banks, right, what people call TradFi or centralized finance, the ones that are regulated and have centralized systems, they've got some big advantages. To start with, they understand the regulatory environment. And let me be
Right.
clear, all of this is going to be regulated, right? There's a time period briefly now where DeFi is significantly less regulated than CeFi, but that will change. It's all going to be regulated. The traditional banks understand regulation much, much better than the DeFi. Secondly,
Understood.
traditional banks have very mature models of how customers behave. So today, DeFi companies, let's take collateralized lending for an example, right? Let's say you give them an asset that's worth $1, they'll let you borrow, say, 60 cents or 70 cents, right? A commercial bank with a sophisticated knowledge of the asset and the company and your credit worthiness might be able to do much better. They might be able to offer you 90 cents or 95 cents. And so commercial banks, these centralized finance entities, have very sophisticated risk models. They have built sophisticated customer profiles. They've got machine learning tools. They've got credit development tools, right? They're able to do a whole bunch of stuff that decentralized models aren't able to do, and potentially in some cases offer their customers a better deal. So we're going to see some really awesome kind of competition. What I think was really going to happen at the end of this, though, is that uh, customers are actually not going to know or care what the plumbing looks like. So,
Right.
for example, today, a lot of our big DeFi and crypto native clients are busy going and getting banking licenses or setting up banks or regulated entities. And they want to be able to let you easily interact between the traditional financial system and the crypto and the DeFi ecosystem. At the same time, I got a whole bunch of very traditional financial services clients who are busy setting up crypto and DeFi divisions. And ultimately, no one's going to know or care how things are done, right? If you think about how you make a payment,
Right.
most people don't really understand when they swipe their credit card what goes on behind the scenes, how the money is actually moved. It's going to be the same way. If you say, please pay me, and you can say, well, how would you like to be paid? And you could give them an Ethereum address, you could give them an email address, you could give them a telephone number, right? They ultimately won't know or care. And when they open up a web page and they see their bank balance or their account balance, they're going to see dollars and euros and Bitcoin and Ethereum and all of these things, and they won't really even have an understanding of like how these systems different systems work. They'll just know that they can access these assets and they can access these services any way they want.
So, if I were to paraphrase that, over time it would be almost like it being as common as doing an ACH transfer or using Zelle, for example.
Exactly, right. So people don't really know that Zella is built on the US banking system, or that it's kind of plugged under how it's plumbed. They just know that that's one mechanism, right? They also know they
Right.
could use PayPal, or they could use Square Cash, or they could use Apple Pay. There's all these different services that they could use. They won't really understand how any of the plumbing works, and they won't have to care.
But what about India? What's the potential for DeFi in the Indian fintech space? And what can regulators do to ensure DeFi grows in India? Rohas had some interesting insights on these questions. Here's what he had to say.
this could only happen once the regulatory situation is a lot clearer. So, because see, when you're thinking about starting a business in this field, then regulations becomes one of the first things to consider. So, I think the first thing that we need is a clear definition. Is the government going to consider crypto as a commodity? Is it going to consider it as a security? Is it going to be considered like a medium of exchange? Or is the government going to take a functional approach where they would say, we will not give one definition. Depending upon what the crypto does, it could be defined as a medium of exchange or as a security or as a commodity. So we need that clarity, that what is it that they're going to look at? Because if I'm looking at putting serious money into it, and today I consider it to be a medium of exchange, and then tomorrow the government suddenly calls it a security, and this is exactly what is happening in the US. And now Coinbase, the world's first largest listed crypto exchange, is getting into big trouble because the SEC is suddenly turning around and saying crypto lending is a security. Now, that was completely unexpected. And this could completely destroy the company. So, we need clarity on how the government is going to define it. Now, I see that the government has set up an IFSCA at Gandhinagar in Gujarat, which is like India's first center for finance, where even though it's physically located in India, you are not really bound by the conventional laws. Kind of consider it like a special economic zone for financial services. That is an excellent place where a lot of people could apply for the regulatory sandbox. Secondly, we already see the conventional regulators, that's the Reserve Bank of India, Insurance Regulatory Development Authority, and SEBI, Securities Exchange Board of India. They are also having their own sandboxes, and these are regulatory sandboxes. So that I think will give a big boost to the use of decentralized finance in India.
It's been an interesting journey for us at India FinTech Diaries as we explored the world of DeFi. I've certainly learned a lot about the subject from our guests today, and I would like to give a big thank you to our guests Paul, Rohas, and Moresh for sharing their views on this subject. Do take a look at the show notes for linked articles and papers on DeFi that can help demystify the subject a lot more. That's it from India FinTech Diaries for this week. Next week, we will be back with a new episode. And until then, stay safe.